Hey, what's up, YouTube? How are you doing today? I was away for a while and yeah, because I got married, so I couldn't manage enough time for my channel, but right now I'm back. And while I was away, I posted some updates on my purchases, and I don't know whether you saw it. It's not a problem, I say it one more time. I did some purchases in Mitsubishi Electrics. This is a Japanese company or corporation which develops, manufactures, distributes, and sells electrical and electronic equipments worldwide. The next stock would be Mondi. Mondi, this is a British company which manufactures and sells packaging and paper products. And recently I bought two more stocks. The first one would be JD.com. You probably heard about it. So this is an e-commerce company from China. And the last but not least will be this a company, Allianz or Allianz. This is a German insurance company. So I don't know about you guys, but for me, those are foreign stocks. Well, not everything. For example, I'm located in Europe, in Germany. So for me, Allianz is a local company. Like I said, I'm in Germany, and this company is being traded on a local stock exchange. So for me, I can buy it directly from my local stock exchange. But other stocks like Mitsubishi Electric, Mondi, and GD.com, those are foreign stocks for me. And at the beginning of this video, I thought I probably want to make individual video for each stock, but I thought it's not a bad idea to give you guys some more information how to purchase foreign stocks, because if you're new into investments and you only bought from your local stock exchange, for example, if you're located in United States, then you probably only bought stocks from a Nasdaq or a NYSE, New York Stock Exchange. So for you to buy a foreign stock, it's a bit tricky. You need to know a bit more. So in this video, I would like to give you some inputs on how to buy foreign stocks being located in your country. And for example, you want to buy stocks from China or from Europe, how to do it with lowest cost ever. So if you're interested in this video, gives me a thumbs up. And yeah, I would start with my explanation. So the easiest way to invest in a foreign stock would be to invest in a ETF. So ETF stands for Exchange Traded Fund, and in simple words, its ETF is just a portfolio of stocks, and ETF could provide exposure for multiple markets for different countries, and you also have different providers for those ETFs like BlackRock, Invesco, Vanguard. As an example, I took this ETF as an example, and you can see Pacific ETF. So through investing in this ETF, you're being exposed to countries like Japan, Australia, Korea, Hong Kong, Singapore, New Zealand, and you invest in stocks like Samsung, Toyota, Sony, SoftBank, and many others. So you guys got the idea. You can invest in foreign stocks through ETFs, and by the way, those ETFs are very cheap. You don't have to pay fees. Some ETFs are free, so you don't have to pay fees at all. If I compare ETFs to mutual funds, for example, to active mutual funds. Be careful, mutual funds are very expensive. You have to pay a high fees. So from a profit you could make, you lose a lot of money because you have to pay all those expenses fees. So be careful, guys. It's better to invest with ETFs because they're cheaper and you have plenty of options to invest through ETFs. If you want to get more information on those, write me in comments below. So that would be the first option, how to invest in foreign stocks. The second option would be to buy ADR. And if you're located in the United States, it would be a good option for you guys to buy or sell stocks of a foreign company. So ADR is this certificate issued by a US depository bank, and it represents specific number of shares. Often one share, but sometimes more. In my next example, I will show you that. So of a foreign company stock. The ADR trades on US stock markets as any domestic shares. In simple words, we have a bank, we have a depository bank in the United States. For example, Citigroup. Citigroup buys a lot of shares from a foreign company like Alibaba, for example. And this bank keeps all those shares as an asset, and then this bank wraps those shares as an ADR, and it sells you in the United States. And this ADR is being listed in the United States as a domestic share, as a domestic company. So for you guys, it's a nice way to buy shares from a foreign company through those depository banks. And below you can see some takeaways on this topic. This one is important. If you buy an ADR for a company which pays dividends, then you will get your dividends paid by this depository bank. In our example, it was Citigroup. So it's also convenient. If a company pays dividend, you will get your dividends. So guys, you got an idea of what an ADR is, but unfortunately the topics is complex, and it's not over. We have different types of ADRs, and if we're talking about sponsored ADRs, we have 3 levels for that. So if a foreign company is having ADR of type 1 or level 1, it means for this company, shares of this company can be traded in the United States only over the counter. What that means, I explain you guys in a second. But with this level of ADR, this company cannot be listed on a domestic stock exchange like Nasdaq and in New York Stock Exchange. It can be present in the United States, like I said, and can also be traded through over the counter, but it cannot be listed on a national stock exchange. If a foreign company is having a level 2 ADR, it means for this company it can be listed on a national exchange like Nasdaq or New York Stock Exchange, but cannot raise capital. So it means American investors can trade shares of this company, but this company is not allowed to raise capital. And we have a level 3 ADR. With this ADR, a foreign company can raise capital. It can be listed on a national stock exchange, and of course it could be traded on a national stock exchange. So you guys see we have 3 types of sponsored ADRs, and behind those ADRs we always have a depository bank like Citigroup, for example. And we have also unsponsored ADRs, and with those ADR, foreign companies cannot be listed on a national stock exchange like it was here on a level 1, but shares of those companies could be traded again like it was here through over the counter. So as a recap, we can see here some takeaways for our sponsored ADRs. Like I said, banks issued sponsored ADRs on behalf of a foreign company whose equity serves as underlying asset. A sponsored ADR is a legal relationship between the ADR and the foreign company, whereby the foreign company is responsible for the cost of issuing the security, and sponsored ADRs are listed on major exchanges, while unsponsored ADRs can only trade over the counter market. Those are important takeaways, especially the last one, because we also have unsponsored ADRs, and unsponsored ADRs are a bit different. For example, this one is very important, that ADRs issued by a depository bank without the involvement participation of the foreign company. So in sponsored ADR, we saw that foreign company need to participate with a bank in order to create those ADRs, but in unsponsored ADRs it's different. It means that a bank could easily issue ADRs for a foreign company without involvement or participation of foreign company. And also those securities trade on the over-the-counter market rather than on American stock exchanges. That's also important. And you, as a holder of unsponsored ADRs, you have less voting rights, and sometimes you even not will get your dividends paid. It happens sometimes, not always, but it can happen. Be aware. So if we compare unsponsored EDRs and sponsored EDRs, probably it's a better idea to go for sponsored EDRs, because for sponsored EDRs we always have always have only one ADR, so it's a combination depository bank and a foreign company, but we can have multiple unsponsored ADRs issued by multiple depository banks. So keep it in mind. For sponsored ADRs, we only have one official ADR from a depository bank, and for unsponsored ADRs we can have plenty. So guys, I mentioned a couple of times over-the-counter market, and let's talk about it, and then I show you a couple of examples. So over-the-counter refers to the process of how securities are traded through a broker-dealer network as opposed to on a centralized exchange. So over-the-counter is not a centralized exchange, it's decentralized. It's basically there for foreign stocks, foreign companies which want to be present somewhere else. So for example, we take a company from Europe. This company want to be present in the United States, but this company is pretty small, and this company doesn't want to pay huge fees to be listed on national stock exchanges like Nasdaq or NYSE. And this company just want to be present in the United States or somewhere else, to be traded, to raise capital. So American investors or other investors from all over the world could buy and sell shares of this company. The problem is with centralized exchanges, to be listed, it costs a lot of money. For example, you can see it here. To be listed on New York Stock Exchange, a company needs to pay $500,000 $100,000, and on Nasdaq it's $75,000. So not every company wants to pay that that amount of money. That's why over the counter is an option to trade foreign stocks through a decentralized network. So those are some takeaways. Um, like I said, company can raise capital through sale of stocks somewhere else in the world. And this is also safe way to buy and sell stocks. If you need more details on this topic or on ADR topic, you can also read this website. I found this website very good. You can read more on benefits and risk about ADRs, also about benefits and risks about over-the-counter stocks. I'm going to link all resources I have in description below to this video. And like I said, this is a very complex topic. The last thing I would explain is this one, Global Depository Receipt. I only show you ADR. So ADR is only for United States, but we have also a cross-listing option. For example, if a foreign company wants to be listed on multiple stock exchanges, not only in the United States, but also in Europe, maybe in India, then this company could do cross-listings. And it is possible with Global Depository Receipt. So Global Depository Receipt is not only for United States, it's basically for the whole world. And like it was with ADRs, you always have a bank, depository bank in background. So for better understanding of Global Depository Receipt, we take this example. We have an Indian company which is already present in the American market through ADRs, and this company wants to further expand into some other developed countries such as in Europe. And this company could easily do it through selling their EDRs to the public of Europe, and the same would be named as GDR. And those GDR can be issued in more than one countries and can be denominated in any freely convertible currencies. So it means that this Indian company can also be traded in Europe in euros through GDR, but also it can have cross listings in other countries, like for example in Asia, and could be traded in Asia in their local currencies as well, also through GDR. So GDR is a huge opportunity for foreign stocks to be listed around the world, not only in the United States, because for the United States we have this ADR, and with GDR you can list a company can be listed somewhere else. And with GDR you can choose between individual listings. For example, this Indian company just want to be listed in Germany, so this company creates GDR for Germany, and this company will be traded, shares of this company will be traded in euros. Whoa, it was a lot of information. To wrap it up, we have three different options to buy and sell foreign stocks. The first would be through ETFs. Second would be through ADRs, especially if you're in the United States. And ADRs could be traded on domestic or local stock exchanges like Nasdaq or NYSE. If those are of level 2 and 3, if those EDRs of level 1 or unsponsored, then they will be traded through OTC, and we have another option to buy and sell stocks through global depository receipts. So it was a lot of theory, but let's see some examples. I take this website from Fidelity, and I search for Nokia, for example. You guys know maybe Nokia is a company based in Finland. So if you're in the United States, it's definitely a foreign stock for you. For me as well. I'm in Germany and Nokia is in Finland, so it's a foreign company. If we look for Nokia, we find here Nokia ADR. So we know already what ADR is. It's American Depository Receipt, and it represents one ordinary share of Series A. So if we click here and go, we see that security type of this stock is depository receipt. That's ADR. If we click here, we see that depository receipt is a type of financial security that is traded on local stock exchange, blah blah. We know it already. So to find a proof for that, we see that primary exchange for this stock is NYSE. So it's New York Stock Exchange. We already know that to be listed on centralized stock exchange in United States, ADR need to be at least of type of level 2 or 3. So it means this stock, this ADR, is traded on New York Stock Exchange with level 2 or 3. Another example, again from Nokia, we have others options for Nokia. For example, this one. I click go, and this time we don't see any type for security like it was before. I click before, and we see here security type ADR, and this time is different. We only see that primary exchange for this ADR would be over-the-counter markets. So it means for this ADR we can buy it only through OTC markets with less liquidity than here, but the same price. Sometimes we have a different situation. For example, Baidu. This is also an ADR. If I click here, you can see Baidu ADR representing 8 ordinary shares of class A. So it means if we buy this ADR, it's also ADR, you can see it here. If we buy this ADR, we buy 8 ordinary shares of this company on a local stock exchange in China. So it goes 1 to 8. You buy one ADR and you get 8 shares of ordinary shares of this company. So sometimes you need to check it. Sometimes it's 1 to 1 representation, sometimes it's 1 to 4, sometimes 1 to 16. In case with Baba, for example, it's the same. It's representing 8 ordinary shares, for example. In case with Nokia, it was 1 to 1. You saw it. Here it's 1 to 1 representation. And for you guys, one more time, if I put Nokia here, we see that this is a foreign company. It's a company from Finland. It's listed on a local stock exchange in Finland, but it's also can be traded on a Italian stock exchange, in Switzerland, in United States on a national stock exchange. You see, NYSE. Also in Sweden, also in Argentina, also in Germany, and also in Great Britain. So it means this company is having a GDR and also a ADR for the United States. So with all those GDRs, we as an investor can buy this company from other countries, and also you guys, if you're in United States, you can buy it at home through ADR. So it would be it for Nokia, but we have some more examples. For example, Mitsubishi Electrics. This is a Japanese company. You can see it here. It's being traded on a local stock exchange in Japan, but you can buy it also in United States through OTC, over the counter. So to prove it, we put here Mitsubishi Electrics, and we see that we have only two options for it. If we click here and search for it, we see that this is ADR, probably unsponsored EDR, or EDR sponsors of level 1, because before we saw here security type, and now we don't see it. And also primary exchange is OTC and not Nasdaq or NICE. So it means for this ADR, it's only available through OTC markets. It's probably unsponsored EDR or EDR of level 1. And Mitsubishi Electrics, another one, is the same. So this is a one-to-one representation EDR, also unsponsored, because it's only traded through OTC markets and not available on Nasdaq or NICE. And this is one-to-one representation of this company stock, and this one is 2-to-1 representation of this company stock. So you guys, I hope you got the idea. Some stocks don't have both EDRs. Sometimes it could be that a foreign company only available through OTC. It is the case with Mitsubishi Electrics. So you only can buy this company through OTC markets. It's not being listed on a domestic stock exchange in the United States, like it was with Nokia, for example. One more time to see the difference. So we see here this is an official ADR, and it's being listed on NICE, and it's one-to-one representation. So guys, that would be it. Like I said, I link all the resources I have, and I have a lot for you. You can read, you can watch videos with explanation on those topics. Important, invest in foreign stocks, because foreign stocks have potential. And like I said at the beginning, I bought those foreign stocks, and soon I'm going to do an individual video for each of this company. I hope you like it. Give me a thumbs up and subscribe. See you.